coming, Juan Carlos. Yesterday, the World Gold Council published its gold demand trends report for the first quarter 2012. We have that report in front of us. The embargo is lifted right now. I want to ask you, what does this report cover?
Well, first of all, thank you so much for having me, Malika. And the report, we have a quarterly report, Gold Demand Trends, as you just mentioned. Every quarter, we go over the main trends that have happened in demand and supply on the gold market. We also have a focus piece, a special piece. And this time,
Turkey?
Exactly. And this time
Very
around, we concentrated on Turkey as it is an important market for gold.
You say Turkey, a reawakening. Why this title?
Well, because after the financial crisis in which we saw some softening, in the financial crisis I mean obviously the Great Recession in 2008 and 2009, when we saw a little bit of softening in terms of demand for gold in Turkey, we have seen a recuperating trend based on various factors.
Are we going to keep seeing that trend? Because you say we expect this level of investment demand to rise further despite recent gold price performance. And I'm looking at this chart, the Turkey gold demand by sector. Do you expect that to rise?
Well, what we are saying here is that investment is going to continue to be an important factor. What we saw, obviously, over the past quarter is that prices of gold fluctuated a bit, and it had a little bit of an effect in the perception of some investors. However, in spite of that, and actually perhaps because of that, we continue to see positive trends within investment in Turkey and worldwide.
And can we talk about the other chart, which is about the gold jewelry demand per capita in Turkey and the gold price and the Turkish gold jewelry exports in the U.S.? Mildas, do you expect the exports to rise? And what is your analysis on this?
Well, the analysis really is that obviously Turkish gold exports are an important part also of the Turkish economy. Last year, they accounted for about $2 billion of the trade balance, so that was important. And what we see is that jewelry is also a way for Turkish people, as you probably may know, to express a view in the gold market, or in other words, to access the gold market.
And when we look at the central bank, the gold reserves, where do you see the Turkish gold reserves?
Well, we don't comment directly on a particular bank, but what we've seen so far, meaning in terms of outlook for a particular bank, we think that in general, central banks around the world, especially emerging markets, will continue to be net buyers. However, just to put into perspective, what we saw over the past several quarters, and in particular in Turkey between October and now, is that there has been an increase in gold reserves, in part as some of the measures by the Turkish bank have been implemented to provide liquidity into the market, into the banking system in Turkey, and that has raised the amount of gold that can be posted in part of the reserves, and those reserves have increased.
In relative comparison, how much did they increase their purchases?
Well, they went in the central banks
yes,
overall.
The Turkish bank, and then I'll come which banks made the significant purchase.
Right. So the Turkish central bank had an increment of about 40 tons, I believe, over the past quarter. We can see the correct number on the report. But, the significant amount, I think, again, it underlines the importance of gold in the monetary system in general, as it can provide liquidity. And that's what the central bank in Turkey has seen, that gold can provide liquidity, and it has been put into the reserves because of that in part.
In terms of the outlook, will gold as an asset class keep performing impressively? Do you expect that in Turkey? Because that's what you said, gold as an asset class has performed impressively over the past decade. Not, of course, only in Turkey, international too, but do you expect to see this trend to continue?
Well, we don't comment directly on price. What we see is that the role for gold, we don't comment on price because we don't make forecasts on the price of gold. But what we see in terms of the role for gold in investment and worldwide on the different sectors is that gold is an important component, or a very important vehicle or useful vehicle for investors to diversify and manage risk more effectively. And we do think that that is going to continue to be the case, that investors will see in gold a means of diversification, a way to provide liquidity and to get tail risk hedging, so in other words, protecting against unforeseen events in the financial economy.
So you're positive on that. So you see the growing interest in gold as an investment. Am I right?
We think that the role for gold in investment portfolios and in risk management is important and will continue to be important. It's an under-owned asset. Globally, there's only about 1% of gold on private hands as a percentage of global assets or equities and bonds and whatnot. And research shows that that percentage for most investors, depending on their risk preference and whatnot, optimally it would be higher. So typically what research shows is that optimal allocations to gold vary between 2 and 10%. What we see is that currently investors around the world hold on average about a 1%, so there's a lot of potential for increase.
In spite of the sell-off in the commodities recently.
Again, not so much concentrating in the price, but on the long-term case.
Let's come back to this report, the first quarter report. How do you compare this to Q1 of 2011?
In terms of demand, gold demand for the first quarter of 2012 was just shy of 1,100 tons, so 1,100 tons, a little bit less than that. It was in volume terms, meaning in tons, in the number of tons that were purchased, about a 5% down from the first quarter in 2011. However, to put that into context, first of all, the amount of demand that we saw in the first quarter of 2012 is pretty much in line with the average demand that we have seen on a quarterly basis over the past 2 years. Okay. So it was fairly consistent. The other thing to put into perspective is that the first quarter of 2011 was also a very strong year for demand. So you're comparing it from a level that was pretty high. So what we see is that in spite of some of the factors and some of the price activity in gold, gold demand in this quarter worldwide was very strong.
Let's talk about specific countries like China, right? China overtook India as the largest market for gold jewelry. How about for the source of gold global demand? Will it overtake the whole India and maybe rest of the countries? Because that's what I see from the report, that China is especially emphasized.
Yeah, well, China and India are both really important markets for gold. Because culturally and because of their affinity in part in India, but also in terms of the mindset for savings and other things, India and China are really important markets, and we expect them to continue to be. What we have seen lately is that China's increase in the amount of gold that they are purchasing, both for consumption and for investment, has been increasing, and we continue to think that that will be the trend.
How about as an investment demand?
Investment demand was also really strong in China last quarter.
Why more, why stronger than any other countries, or especially India? What's going on there?
What happened in India, I think it was a confluence on many factors that affected Indian demand in the first quarter. On the one hand, you obviously have higher prices from the year before, right? So that has an effect. But more importantly, it's not only about prices, it's also the fact that the rupee itself was depreciating against the dollar. So the rupee had a volatility and had some impact over there. And if you couple that with increments in taxes and some imposition of taxes on jewelry production from the Indian government, that also caused a few disruptions during the quarter and had an effect on demand. However, we think that overall, again, both India and China are continue to be very important. What we see in terms of China is very positive trends as they continue to grow and as their economy grows and as they can access different markets consistently.
So even though it's not a large decrease in the demand, these are the reasons that India's demand dropped off a little bit in Q1.
Correct.
How about the investment? You say investment was the top sector for demand with a 13% increase year on year to 389 tons.
That is
correct.
What
was driving that interest?
Well, there were many factors. First of all, most of investment demand this quarter was driven by flows into ETFs. So gold-backed ETFs primarily is what we follow, ETFs and similar products. And what we saw is a continued interest, especially at the beginning of the quarter, in January and in February, where we saw quite a few flows. And I think that the understanding in terms of investment is that continued uncertainty, the fact that you can use gold to provide diversification, to hedge against unforeseen risks, and also as a currency hedge and as an inflation hedge, provided support for investment throughout the quarter.
Thank you so much. Well, this is the first time we talk about, right? Yesterday you published this gold demand trends report, and here we broadcast as the first time to our audience. Thank you for coming.
Thank you, Melissa.